talking dreams so big that they'll haunt you, or they'll calm you. That's how you know if you gotta go and get to win and not conquer. I had to go out and get it without a sponsor. Kept it real, never crooked, yeah, that's honor. Now I can go out and get it how I want to. Hashtag blessed, I choose.
What is up, YouTube, Rumble, and Twitter? Welcome back to the Ryan Matta Show. Today is Thursday, April 25th. It's 10:02 a.m., and thank you for joining us. Thank you for smashing that like button. We're going to unpack a lot today. Probably one of my favorite guests that I've had the opportunity to have on the show is Eric V. Stacks. He's going to be joining us, and we're going to dive right into things. But if you guys want to take a look at some great content, swing over to Robin's channel and check out the interview that he did over here with Eric. It's probably one of my favorite. Eric, it's an honor to have you back on the show, buddy. Thanks for joining me.
Yeah, man. Thanks for having me. It's an honor to be here.
Man, you had sent me a message the other day about, like my outlook on politics and how politics is kind of just there's almost this negative mindset where, Bitcoin is kind of exposing it all. And it's the light to the dark, positive about. And I think you're one of the most positive people here, also with one of the most prolific thinkers in the way that you frame things and you can unpack things. So I kind of wanted to bring you on, say what up again, but then I want to dive into this tweet over here, which you had just put out, which you say, Bitcoin is the discovery of true scarcity and the path to true abundance. And you said, Jeff Booth famously said, when you have abundance in money, you create scarcity in everything. When you have scarcity in money, you create abundance in everything else. So why don't you give a big shout out, let everybody know where they can follow you at, and then let's unpack this one together.
Yeah, so I'm on Twitter or X, Eric V. Stacks, that's my handle. I've been going to all the Bitcoin conferences recently, and I make videos talking about the long-term philosophical and societal implications of this new discovery, technology, whatever you want to call it. And so, that's a big one there. That's a big one to unpack. And I'll say that the first time I heard Jeff Booth speak to his thesis or his interpretation of what's taking place in the world, I listened to the audio version of his book and listened to several of his interviews. And it's really a profound thing that's kind of hard for us to, it was at least me, and I've seen this in other people, like Peter McCormick as an example. I listened to, I think there was 3 interviews on his show with Jeff Booth. And it was on the 3rd interview where even McCormick himself is like, oh, wow, I actually think I fully understand what you're saying here. Like, it really took me a lot to wrap my mind around this when you're speaking to technology and deflation and so on and so forth. And so, yeah, the best way that I can articulate that, and it's like, when you haven't had some of these new thoughts, it's like you have to wire new neural pathways. You have to fire new, like, neurological synapses to wrap your brain around this stuff. And it's a little bit of a challenge because we live in a world where essentially everything except for time and square mileage, you could say, as far as we are aware, is unlimited. We're making more of it, right? With technology and human ingenuity, we are creating more of everything that we want, right? We can process more clean water. We can make more houses. We can raise more livestock. You can grow more plants. You can make more computers, widgets, whatever, right? Excuse me. And so, in that sense, if you have a Keynesian economic model where the currency is inflating, the currency supply is inflating, that is also something we're making more of. So if you measure the value of anything in the marketplace in the dollar, you're measuring the value of, let's say, a house with another variable, because the amount of monetary units or the amount of dollars is also a variable. So you can't accurately measure the value of the house because you're measuring it in something else that is not a constant. It's not a fixed unit. So, like, something I said in that, I made a video there with that post that was the title to a video, which was essentially a 15-minute rant on, like, these things that we contend with. And it's a good example, like, what's happening in the economy, like with my truck. Like, I have a Ford diesel truck, right? I don't go and buy the diesel truck to think to myself like, yo, I'm going to project my economic energy into the future. I'm going to use this truck as an asset, as a savings technology, some sort of a vessel to put my life force in, right? But we do that with houses. But the issue with that is the same thing that's happening with the truck that everybody can see. It's all obvious. It's a depreciating item. It's a liability. It's not an asset. Everyone knows this. You go in and you're going to buy this thing. It's 80 grand, 100 grand, 50 grand, whatever it is, and it's going to drop significantly in value and very quickly, right? Well, houses are losing value just like the vehicle is. That what's taking place, though, is that the dollar that we measure the value of the house in is losing its value so fast that the dollar denominated value of the house is going up, giving you the optical illusion of your house actually appreciating. But in real terms, it is depreciating. And the best way I would just explain that would be, let's use Saylor's keynote from Prague. It was the first keynote he did with slides. This was in 2023. It's 45 minutes. If everybody hasn't watched it, you should, maybe twice, because it's really good. Okay. He breaks down all the asset classes and what the dollar denominated value of every asset class is, and then also breaks down the inflation rate in terms of the money supply, not CPI, right? Not a basket, not a manipulated basket of goods that's changing to keep the number low. The actual M2 money supply, the monetary units being created and injected into the system over the last 100 years. And I could be slightly wrong about the numbers, but you'll get the point. This is pretty close. At 7.5% a year, annual average inflation in the monetary units within the system. That's how many more dollars are being created every year, and it compounds. The housing market on average has gone up 7.5% a year on average. So if you have a property that you held over the last 100 years, its dollar denominated value has gone up, but at the same rate in which the currency supply is debased. So you would think that that's a decent store of value. If your inflation rate is 7.5%, that's a 7.5% hurdle rate. If you're not collecting 7.5% yield on an asset that you're saving money in or your economic energy in, that you're not making money. If you're making more than 7.5%, you are making money. It's an asset that you're appreciating on. Well, with real estate, you have 1% annual average maintenance costs associated with the real estate. Mother Nature, entropy, the universe is trying to gobble that baby up, send it right back into the earth, decompose it, turn it into dust, right? So you have to paint it. You got to put a roof on it. You got to change the doorknobs. You got to do whatever. You have maintenance costs. $1 million property is going to cost you on average $10,000 a year to keep that thing nice. Otherwise, it's going to be dilapidated and look like garbage, right? And in most jurisdictions, some it's more than this, but you have 1% in tax. So right out of the gate, if you were to try to save your economic energy, someone writes you a fat check. You're like, hey, I'm going to go buy some houses. I'm not even going to get too sophisticated. I'm not going to, take out mortgages. None of that. I'm just going to buy some houses. They're going to be paid for. I don't like the bank. F these guys. I'm going to save my money in houses. Well, you have 2% between maintenance and taxes that's coming right off of the top. So you're losing 2% if the currency supply is debasing at 7.5 and your appreciation is 7.5. You actually have a real yield of 5%. You're losing 2%. That's a comparable asset to gold, except for gold doesn't actually require the energy expenditure to hire the contractors to do the maintenance, right? It's because the gold supply is inflating at 2%. So you have a 2% loss. You could look at it however, but it does equate to a 2% loss. A 2% energy loss equates to a 35-year half-life. So you lose half of the value of the property in 35 years, or you have to stick half of the value of the property energetically or monetarily speaking into the property to maintain that $1 million equivalent going forward. Every year you're losing 10% or 2%, excuse me. So that metric is a good way for us to understand a way of measuring an asset's real appreciation. Is it really appreciating or does it look like it's appreciating, right? And so back to the beginning here, and this is a lot, bear with me. This is,
kill it, man.
trying to do what took me hours and hours to like wrap my mind around. And I think most people, including some of the world's, thought leaders and interviewers, etc. Like, I've watched it happen when they're interviewing Booth. It's that poof epiphany moment.
Bro,
We live in a deflationary world.
This is all notes from that Jeff Booth interviews. Like I'm deep down that rabbit hole, and it's so hard to unpack. So no, we appreciate it, man. You're killing it.
It is. Cool. So we live in a deflationary world. Booth has unpacked this. 100,000 years ago, let's say in some parallel timeline, some other universe, some fictitious, land, you and I are just at the river. We're hunting, we're fishing, right? We're fishing, we're procuring resources for our people, right? And we decide, hey, you know what? We're using these spears. It's not super energy efficient. We live in a universe where it's energy in, energy out, and so I think what we should do is we should stop using these spears. We should take the next week and we should go back. We should get the babes to stop picking berries, and we're all collectively going to get together and we're going to spend a week making a net, a big giant net. And actually, we're also going to throw some boulders into the river, and we're going to divert part of it so that we channel all the fish into one little tight part of the river here, the stream, okay? We're going to drop that net in, and we're, instead of catching 5 fish a day by exerting a bunch of energy, we're going to catch 500, right? That is capitalism, first off. That's a capitalistic endeavor. That is us stopping, saving up capital, and then deploying that capital into the proverbial marketplace to get more for less, right? So that's capitalism, and that's deflation. That is making something more abundant in this little fictional village where there's a huge demand for fish, right? And so we're going to satiate that demand by meeting that demand with supply, by figuring out a new technological approach to procuring more fish for less energy, right? That's deflation. So, and if that marketplace is using, let's say, glass beads or seashells to trade for fish and other services, because we need some sort of a monetary technology to scale, because all we're doing is using an intermediary to denominate the value of one thing into another thing. Like I could say that, like, the shoes or the moccasins that I want one of the village members to give me is worth a certain amount of fish. But like that creates this complicated trade dynamic where at the same time, I also need to go get some chickens and I need to go get some, some arrowheads or whatever, right? But if we have some sort of a technology, a monetary instrument that is convertible into all other goods or services, that whatever that marketplace can produce, that's a much more efficient way, and it allows for the division of labor to scale, right? And so that's why we started using the money. However, anyways, so as you and I come back with this net full of fish, we're dumping all this fish onto the market, and now it's less expensive. It's deflation. So in a Keynesian, an MMT, modern monetary system, where you have an inflationary money supply, and in our case, the monetary units are lent into existence as debt against assets, predominantly housing and equities. So when you go to the bank and you go get a loan for a house, say it's a $500,000 house, you put 50 grand down, you've been working in the marketplace, you lay tile, you make content, you build homes, doesn't matter what it is you do, you got 50 G's, you've earned it, it's real, it's in your bank, at least it's on the ledger and it says that it's yours in the bank. You say, hey, I'm going to buy this house. $450,000 mortgage. Well, a significant percentage, if not all of that mortgage, when the mortgage is approved, those monetary units, those dollars, are lent into existence. So now that expands the money supply, and it requires, and here's the real conundrum, it requires that the dollar denominated value of the house continue to go up. Because if the dollar denominated value of the house goes down, that's deflation. And this is why some of the Keynesian economists say deflation will destroy our world. It'll break the economy. It would wreck the theft-based monetary system that we have, because the dollar denominated value of that let's say that $500,000 house drops, and it is dropping in real terms. But let's say it drops in value denominated in dollars to 400 grand. Now, whoever took out that $450,000 mortgage is $50,000 upside down, and they're less incentivized to continue to go into the marketplace and earn and pay the bank, right? And so right out of the gate, when that money is created, there's actually not enough money in the system to pay it back, because they issue the 450 grand to create the mortgage, but not the money to pay the interest. So it is the ultimate form of a Ponzi scheme, and it is an inflationary monetary system that requires, and here's the main point, is it requires the dollar denominated value of the assets that are collateralized or backing the debt to go up. However, we live in a deflationary world where human ingenuity and technology and us figuring out how to channel energy more efficiently, like the Sailor series was so profound. I've listened to the Sailor series so many times. Like if I'm on an airplane and I don't have like Wi-Fi, I have them all downloaded. I'll just take a little trip down the Sailor series again, because every time it helps me understand the forces we're contending with in this world more. We're just beings in this realm, this reality, this planet, whatever you want to call it, contending with the forces of the universe, Mother Nature, whatever, figuring out how to channel energy more efficiently. So with that strive, which you'll never be able to stifle, we are, and that's and especially with technology and computing power and things now, like we're getting way more efficient. We're producing everything more efficiently. It takes less energy to build a house than it did in 1950. Why is a house that was built in 1950 that's all old and shitty, like a Ford pickup with 380,000 miles is worth nothing, right? We all know that. It's like, but why is it that this old house is worth so much denominated in dollars? Because there's so many more monetary units in the system chasing this house, right? And the housing market predominantly in equities is the assets that's collateralizing that debt. And so the bailouts that we have, as an example, in 2008, you have the great financial crisis, right? And it requires the bailouts. COVID, they shut the markets down, right? And, then they come in with a new that was a bailout. It was just a new creative way to do it. Here's your PPP, and then we're going to forgive you on it. So instead of just giving all sorts of money to the banks, and then, of course, the everyday man's going to lose his fucking mind. Excuse me, I don't know if I should be cussing. I get a little passionate about this stuff. It's annoying.
We on my show today.
Yeah. So the everyday man would lose his mind if they came through with another bailout. Oh, you're just going to give all these banks a bunch of money. So you know how they bailed the marketplace out is they gave it to the everyday person, the business owning class, right? And so like I got a buddy whose mom owns a coffee shop. She got like 600 grand in PPP, right? We know some of the celebrities that had big businesses and got a bunch of money, and some of them got in trouble for lying on their paperwork or whatever. Anyways, so when you have a liquidity crisis, it is actually from first principles in the most basic reason it's taking place because we live in a fundamentally deflationary world where we are driving prices down on everything, but our economic system, our monetary technology requires prices to go up on everything, and not necessarily everything, but whatever assets are, and we're also monetizing things that have utility value that we need, like houses and stocks, even shares in companies. Like, why are we treating shares? Why is Wall Street America's savings account? Why is housing America's savings account? Because the money is defective, because they're making money so abundant. What we're being forced to use as money, the currency is, and this goes into Jeff Booth's little saying here, where you have abundance and money, you create scarcity of everything else. Because the money isn't a strong asset within the marketplace, you essentially are incentivized with this debt-based monetary system to short the dollar, go borrow dollars, short the dollar, and go long something like real estate. When you take out a mortgage and buy a house, you're shorting the dollar and you're longing the real estate. In financial investment terms, that's exactly what's taking place. What you're doing is you're betting that the dollar is going to depreciate because they're debasing it. And you're betting that the housing that you're purchasing isn't going to depreciate as fast. We think it appreciates, but only denominated in dollars. So back to liquidity crisis, though. We're producing more of everything for less. I'm going to keep just hammering that in. And there was a period there in a lot of my videos, I say this all the time, like we live in a deflationary world where you have a large demand for something and there's not enough supply. The free market bids the price up. As the price goes up, the economic incentive for entrepreneurs and capital to move into that sector of the marketplace, produce whatever it is that there's a lot of demand for, as satiate that demand with supply, it'll make whatever it is more abundant, and then it'll in turn drive the price down because you have more of it than what you had before. When the price was high, the free market will bid the price down. Oh, why am I going to buy your widget when everybody else has the same widget for sale, for example, and they're offering it for less? And so that's that free market supply and demand dynamic, right?
Yeah, Jeff Booth uses the calculator, right? Like a calculator's
Yes,
free now. You
totally.
would never pay for it, but back in the day, it was $2,000 for a nice calculator, right?
Absolutely, yes. And so we live in a deflationary world. We're driving prices down on everything. We're producing everything more efficiently, including houses. A house that, was built in 1960 probably took a year to build. It's some arbitrary thing. Maybe you get a big team, you can do it faster, whatever. But now you could bang out a house in a couple days. Have you seen these guys? They have fucking nail guns that are like that shoot with the 22 cal, bam, 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 bam. It's like, dude, not even to mention AI and robots. Like you can construct a house in record times, right? Like if it's an energy in, energy out world, why does it take more of my life force to purchase that house? Well, it's the
Tesla
money
homes, 12
system.
hours. Eric, 12 hours. You can have a fully built house up and running from nothing to a fully built livable house in 12 hours with the Tesla houses. It's wild.
It's incredible. So when there's a default in the system, the default is really based upon, in the most basic level, we live in a deflationary world and we're producing more for less. And so what happens is you, and I heard Breedlove speak to this, when there's a default, every time that there's a mass default within the system, banks are going under, whatever, right? It's that liquidity crisis. It's that economic concern. It's why the Federal Reserve can't raise the interest rates too fast, right? Because if they do, then we're going to create this banking, and we all know it. The banks are going to go under. Get your money out of the banks. There's going to be a bank run. They're going to do a bail-in. All of these things that everyone's all concerned about. Well, those fears all stem from the fact that as the asset prices drop, which we're naturally pushing them down, they're having to push them up. It's two opposing forces by sending more monetary units into the system. So in 2008, when we had a big, more theft. In 2000, but they don't look at it that way. They're just keeping the system up and by injecting the liquidity into the system. And it also keeps the artificial velocity that stimulates the velocity of the money. It encourages you to short the money, to move out of the money like a hot potato and hoard other things in the marketplace. Going back to Jeff Booth saying, where you have abundance in money, you create scarcity, everything. You don't want the money. You want a bunch of houses because they're a better store of value. So you're creating scarcity and you're contributing to homelessness. And when 2008 or COVID happens, it requires exponentially more money printing because there's exponentially more liabilities within the system every time that there's a default. So if we have a default, a mass default, let's say a couple of years from now, there's more liabilities than there was in 2020 or in 2009 because they keep lending more money into existence as debt against more assets. And as we're driving the prices down on those assets, it's requiring more liquidity, more monetary units to be lent into the marketplace to keep the dollar-denominated value of the assets backing the debt going up. But we live in a fundamentally deflationary world. It's two opposing forces. And as a great example, this is one of the things for me, like in my personal story, I'm a cannabis producer. Obviously, I got cannabis in the background here, right? And so I've been producing cannabis professionally for 15 years in the state of California. And 10 years ago, a premier bulk wholesale pound of cannabis that produced lawfully and distributed to a dispensary, bulk wholesale was $3,000, maybe $4,000. Now, a better pound is $1,000. So let's say it's $3,000 and it's $1,000. So I make 1/3 per unit produced. However, in the meantime, my cost of operating / living, my OPEX has increased by double. So I actually make between $1 1/6 and 1/12, because it's been, my cost of living has doubled, maybe even tripled in some areas like energy and grow medium, etc. So I make 1/6 to 1/12 what I used to make 10 years ago. And how do you combat that? Scaling up. Well, if everybody does that, then it further exacerbates the problem, because the issue is, as demand is satiated by supply for anything, we drive the price down. And as you drive the price down, you're getting poorer if your P&L, because your cost of operating is going up. And if your cost of operating goes up 10%, but your profits don't go up 10%, you actually took a haircut, right? So that, in my case, is an extreme example of I have dollar denominated wage deflation, and I have dollar denominated inflation in my cost of operating, cost of living. So I'm experiencing the deflationary forces of our world, where we're pushing prices down by satiating demand with supply, by producing more efficiently. And this could be anything. It doesn't need to be cannabis. It could be houses. It could be grass-fed beef. It could be tech stocks. It could be shares in companies like Apple. There will be another company who's going to provide technological solutions to the marketplace that you can buy shares in. That is dilutive of Apple. The existence of beachfront real estate in Dubai is dilutive of beachfront real estate in Miami, right? That's a deflationary force. Now, in my case, it's extreme. I got dollar denominated deflation in my wages and dollar denominated inflation in my OPEX, my cost of operating my life, you could say. Now, with somebody who's on minimum wage, or somebody who gets $50 an hour and they get a 5% wage increase, but they have a 10 or 15% increase in their cost of living. Let's use 5% increase in your wages 1 year, but 15% increase in your cost of living. You actually took a 10% haircut. And it's an optical illusion where you're like, I just got a raise, but the house that I want is further out of reach. That is because we have a debt-based fiat monetary system where the monetary units are lent into existence as debt against assets. The assets are inflating in supply. We live in a deflationary world. As we're driving the price down on those assets by creating more of them, we are requiring more money printing, which is further moving the goalpost away from the everyday individual, further incentivizing scumbaggery within the marketplace, further bifurcating. Actually, on that note, little side note, somebody mentioned in one of my videos the other day, don't say bifurcating. Elizabeth Warren says this. I haven't listened to anything Elizabeth Warren's ever said. I must have heard 3 paragraphs come out of her mouth. Like, I don't have time to pay attention to what the political fucking regime is talking about, because it's all bullshit. Until one of them starts talking about adopting Bitcoin as a treasury reserve standard, I don't give a shit. It's 2 fucking heads to the same fucking broken coin. You got, it's either the left hand with the right red glove stealing from you, or it's the fucking right hand with a blue glove, or whatever. Either way, you got a hand in your pocket, they're fucking stealing from you. So anyways. Yeah, so that centralizing force, though, is bifurcating our society and creating a have-not and a have-yachts world, because it's siphoning economic energy from the productive class and into the property owning class. It's shittifying everything. It's reducing the quality, because if you're an auto manufacturer, for example, I got this truck, man. I got this fucking diesel truck that I like. It's a great truck, whatever. It's a Ford diesel. It was a lot of U.S. dollars to buy this. Like, I can barely believe how many U.S. dollars to just buy a good old pickup truck. Dude, it's all plastic. The leather, it's not even leather, it's pleather, dude. I'm like looking at the steering wheel the other day. I'm like, why is my steering wheel falling apart? This truck, I bought it brand new. It's got 15,000 miles on it. It's not even leather. The thing was expensive. Like, that's because everybody's cost of operating, the large corporations, the nation state, the government, everybody, the military, everybody down to the person who's living homeless on Skid Row, our cost of operating is going up, because we are using a inflationary monetary system, but we are driving prices down on everything. We live in a deflationary world. It's 2 opposing forces. And so as they're injecting more monetary units, and it's more debasement, because the more efficient we become, the more we push prices down, requiring more debasement to continue to push prices up. Right?
You know, it's like, and COVID too is they sent us that, what was it, $1 trillion, right? They gave us $1 trillion in stimulus checks. And then over the next year, your cost to live went up, the average American, by $11,000. So they gave you
Yeah.
$1,000 free. And I think about that, like they only expanded or printed basically $1 trillion out of thin air. And then I look at, we're adding $1 trillion to the GDP or to our debt every 90 days now. Every 90 days, we increase the national debt by $1 trillion. So is that going to cost, like, if that's happens three and a half times a year, is it really going to get that much more expensive every year? Is that adding like almost $30,000 worth of increased costs at the rate we're going up right now? You see, if they gave us $1 million during COVID and it took us up by like $10,000 per person, are we getting to a point where it's just accelerating so bad that we hyperinflate soon?
Yes and no. This is where it gets really interesting, and I guess little disclosure. In the famous words of Jeffrey Lebowski, this is just my opinion, man. I'm just a dude. I'm just a dude trying to figure out how to not get lied to, stolen from, and poisoned, just like anybody else. But I thought long and hard about it, and I can articulate this at least decent enough. It makes some sense to me.
Yeah.
So. Let's take a play, or let's reference back to something Saylor said in an interview with Lex Friedman. So we're measuring inflation with a scalar. We're trying to put one number, CPI, across the entire economy and distill the inflation rate down to one number, CPI, Consumer Price Index, right? And this is a basket that they're always changing. The square footage of the apartment is decreasing because you got a flat screen TV and we're becoming more efficient, right? So they're manipulating the metric, whatever. The reality is that to measure inflation would require a complicated math equation called a vector, which is like, I'm not a mathematician, but I think about it as this like enormous mathematical equation where you're measuring the supply and demand dynamics everywhere in the marketplace all at the same time against every good or service. So the cost to get your plumbing repaired in Detroit is inflating or deflating at a different rate than buying cheese at Walmart in Palm Springs is, which is inflating or deflating at a different rate than trying to buy a $40 million flat in Miami is. And that's going up or down at a different rate than trying to figure out how to send your kids to a university in Indianapolis or whatever, right? Everything is going up or down at different rates based upon supply and demand dynamics. And additionally, how many monetary units are getting injected into the marketplace, right? And so with COVID, what ended up happening is you did have hyperinflation. This is another thing Saylor says. You had hyperinflation in the bond market. You had hyperinflation in certain asset classes, because the property owning, generally speaking, the business owning class that received all that PPP, instead of going and buying $700 silkscreen Gucci t-shirts and YOLOing into a Disneyland trip, they did some of that, but a significant percentage of that money went right into store of value assets. And so it then allows for that property owning class to further leverage and short the currency and spend more money into the marketplace that then changes hands from one service provider to another, and it permeates the marketplace that way, and it does bring prices up. But prices aren't all going up the same rate across the board. So what's taking place is a result of Bitcoin, and this is where it's really fun. And this is an enormous answer based upon that 1-2 sentence breakdown that Jeff Booth laid out there, right? And it's just so much to unpack. I mean, and I've talked about this for just countless hours. Just, oh my goodness, it's a very fun rabbit hole to go down. So where you have abundance of money, you're creating scarcity and everything else. Because what happens is, and what that means is, in our case, because where you have abundance in currency, where you have abundance in dollars, you're creating scarcity and everything else. Because what people are doing is no rich person owns or has a bank account full of a bunch of dollars. Like Donald Trump isn't just rolling around and he's like, yeah, I got billions in the bank. No, what he has is, he might have a couple million in the bank. He might have 100 million in the bank because he's got $5 million or $10 million worth of costs every month, right? Yeah. But if he's worth billions and billions and billions of dollars, he's worth. That means he has a bunch of stuff. he has real estate, he has equities, he has treasuries, he's got whatever. He doesn't actually have dollars in the bank. Nobody does. Nobody has that much money and stored in dollars in the bank. And so what's taking place is that we're saving in stuff. So you're creating scarcity in stuff. You're monetizing asset classes like equities and housing predominantly here in the States. So there's this enormous monetary premium put on housing because you need it to live in, and then productive market participants need it to save their surplus in, right? And so, and because then the property owning class now has an enormous incentive to get political because the real estate is visible, and now you got to participate in the political sphere, and you got to figure out how to affect policy that's going to give you incentives. You're going to get depreciation. You're going to get, and here's the other thing. You got $10 million worth of real estate. Let's say you own 20 single family units and they're appreciating at 7.5% a year on average. That's 750 grand you make in 1 year in equity accruement, and you didn't have to do anything. You could be like, oh, well, I paid to have the house painted, and one of the tenants was so rough on my doorknobs, and I changed those, and I had to push this paperwork around in my office all day. It was exhausting, yes. Right? I'm a landlord. I'm a service provider. I earn my money. Yeah. Fair enough. Whatever. That's besides the point. But 750 grand and value there that you achieved actually on a depreciating asset, an item. It's a liability. Let's get real. And you could then go to the bank. You could say, hey, I got $10 million worth of real estate. It's up 7.5% a year. That's 750K this year alone. I want to borrow 400 grand of that. And I'm going to take 50 G's. I'm going to put it down on another $500,000 house. And I'm going to take $350,000 of that equity. And I'm going to use some of it to pay some bills. And then I'm going to use the rest of it to just, I don't know, travel and have fun. And I, you know what? Actually, I think I want another Porsche. Actually, I think I want an additional Porsche to the two I already have. And here's the other thing, too. And this is where the AOCs of the world are losing their minds. They're like, tax the rich. Well, it's debt. It's not taxed. It's not earned income. It's not capital gains. The person didn't sell anything, so there's no taxable event. They didn't go in the marketplace and then earn it's not earned income. So that right there that's legislation, that's laws, that's rules that are put into effect by people who are protecting their self-interest. It's the property owning class further protecting themselves through regulations. It's a regulatory moat around capturing some sector in the marketplace. This is another thing Jeff Booth speaks to.
Yeah,
gosh, there's so many webs here. I'm trying to
the system's
trying to
being
pull
regulated.
it all back together for you.
The system's regulated to protect you from the people that are stealing your money. I think that's the best way that Jeff said that, right? Like, we have a system that's so broken that there's regulators, and those regulators aren't there to protect you, the investor. They're actually protecting the people that are stealing the investor's wealth.
But that's us also.
Yeah.
That's us. Do you go up to your buddy that owns 6 houses and do you just say, hey, buddy, we went to high school together. We had a great time. We got drunk together for the first time. I remember when Brittany threw up on your shoes at prom. And you know what? Here's the deal. You just bought your 7th house and we're at the barbecue. And guess what? You're a shitbag. And you're contributing to homelessness because you just accessed your dollar-denominated equity and you didn't pay any taxes. You could get fucked, you shitbag. We're not friends anymore. No, but we do that to Larry Fink. Yep. Hey, Larry Fink, you bought 10,000 more single-family homes. You're a shitbag, right? And so it's just behaving based upon the incentives that are built into the system that we have, right? And so
serving yourself in.
And then as that separates or bifurcates our society, then the regulators then have to put in more regulation to protect us from doing what we're doing because of the rules that are in the incentive, like rent caps. Like if I owned a bunch of real estate, I'd be bumming if they increased my cost of operating my real estate empire because they're debasing the currency. Then they prevent me from raising my prices. Like Matt Crowder with Bitcoin University did a great video on how the Canadian government is just lying to the people and gaslighting them about the greedy capitalistic grocery store owners that are raising the food prices and just taking advantage of they're just taking advantage of you. They're just raising the prices because everyone knows there's inflation and they're just price gouging you. Well, he pulled up because they're publicly traded corporations. He pulled up their quarterly earnings and is like, hey, they're actually making less money over the last every quarter over the last fucking, I don't know, 4 or 5 years. They're making a little bit less, a little bit less, a little bit less. And so the problem is where they're putting it, like Booth says, and I don't know if it's the exact words, but this is essentially what you just said. They're putting in more rules and regulations to protect you from the plunder that's taking place from the theft system that we're operating in, right? And it's this feedback loop of more rules and more energy allocated to enforce those rules to protect you from it's like this broken feedback loop that you have there. And so now that we have Bitcoin, though, we have a truly scarce monetary instrument. It is literally the discovery of true scarcity. It's pure monetary energy. It's not a house. You can't live in a Bitcoin, right? You can't live in a Bitcoin. You can't wrap a space shuttle with Bitcoin. You can't put Bitcoin into some electronic. You can't wear Bitcoin on a chain to virtue signal to your group socially that you're successful, whatever, right? It's just pure utility value, and it's truly scarce. And now with the most recent halving, it's the hardest asset stock to flow valuated, from the stock to flow evaluation. It's the hardest asset in the marketplace. So because the incentive is to go out into the world, produce and earn, we're humans channeling energy. We want to continue to figure out how to put out less energy to get more in exchange, right? That's just the fundamental capitalistic just drive that we all have. And we want to store that in something. And just because of the market forces that we have and are contending with, and it's based upon supply and demand, and whatever we use is the money. The reason we want money is not because we want the money. You don't want a bunch of gold. Gold is absolutely useless, even unless you're going to wear it. But even then, wearing it is just a flex because it's worth money, right? It's worth something. Money is a call option on any good or service the marketplace can produce. So money essentially has infinite demand, although beachfront real estate in Miami doesn't have infinite demand. Although grass-fed beef grazed in Texas doesn't have infinite demand. Not everybody wants it, but everybody wants it because money can buy you essentially anything that the marketplace produces, right? And so now that we have the most scarce asset or instrument in the marketplace is perfectly engineered money, we have discovered a true scarcity in money. And that means that the incentive over time is going to be to get rid of all of these other assets that we're holding to store our economic energy in and move that into Bitcoin, which is going back to Jeff Booth saying, where you have scarcity in money, you create abundance in everything else. As an example, I own only Bitcoin and I have no real estate, including the house that I live in, including the business that I have been managing for the last 2 years. I was one of the first license holders in the state of California for my cannabis farm. It was a dream come true, a big achievement. Turned nightmare. I realized I had an enormous amount of risk associated with this business endeavor. And at the time I discovered Bitcoin, and I realized that Bitcoin's the apex asset. It's the apex property. It is the strongest money to ever exist. It's actually the first money humanity's ever had. We had a rock, a yellow shiny rock. And the reason that some of the banking elites are in the position of power that we're in, one of the great Rothschilds, I don't know, however long ago, a couple hundred years ago, he solved a technological conundrum that we had. He offered a custodial service for your gold. He said, I'll make a big old giant vault here. I'll give you these certificates. You can take the certificates into the marketplace. For example, you couldn't go from,
I believe.
1760. You couldn't go from England to Italy to go buy a villa with a big old chest full of gold. Some bandits will just kill you and take it. So, but if you had certificates, it was easier to conceal them and, whatever, you might be able to actually get them terminated and get new ones issued, blah, blah, blah. So the reason our system has become unhinged in the manner in which it has is not necessarily because of some diabolical evil plan per se. Maybe that's part of it. I don't know. Actually, at this point, I don't even think about it anymore because it's a moot point. It doesn't even matter. I used to spend a lot of my life thinking about, dang, these evil doers. This is a terrible world that we live in, and the atrocities taking place are horrible. Don't get me wrong. I understand how terrible it all is, but now I see why it unfolded from, like, if you remove morals and ethics and some diabolical evil plan out of that, and you just look at like, oh, some corrupt humans served their self-interest at, the cost of other people. I guess you could say that Since the beginning of time, the person who's broken inside within our society does that, right? And the reason that we're also broken inside is because we know we're at a game theoretic disadvantage in the marketplace against the people who are willing to lie, cheat, and steal if we aren't willing to lie, cheat, and steal. So anyways, it creates this huge, enormous conundrum. And to think too, on a positive note, though, look at the world we built on such a broken, shitty technology. Gold.
Yeah.
We built the civilization we have now based upon the monetary technology of a yellow, shiny rock. Where it hit its limitation because of its physicality, it required a layer 2, a currency unit, a paper certificate unit, and it became corrupted because humans are corrupt. So anyways, back to scarcity and money. The money's the hardest asset in the marketplace. Bitcoin's the first money humanity's ever had. It's the hardest asset we have. It's pure monetary energy. The hoarding of it doesn't hurt anybody. It doesn't have any second or third order negative effects like hoarding houses does. And the incentive to get the most, to serve my self-interest, anybody's self-interest, is to hoard the money and only deploy the money when you need something, right? And this is where, yeah, and so as a result of doing that, in my case, as an example, I don't own any real estate. That's downward price pressure on real estate. I'm not participating in the real estate market to buy my 3rd, 4th, 5th, 40th, whatever it is, single family home, fourplex, apartment building, whatever, to rent real estate to the people who need it. You could say there's a demand for people who need to rent real estate. That's cool. Somebody can satiate that demand. People still think that's a good business model. I don't think it's so great, and I personally believe and based upon crunching a bunch of basic numbers, just holding the Bitcoin is going to get you further down the road. As far as your wealth, as far as your ability to convert whatever monetary instrument you're holding into other goods and services in the future. And so by having scarcity in money, by having a metaphysical, invisible, inviolable monetary instrument like Bitcoin, the incentive to serve anyone's self-interest is to hoard it. And that means that we're not now hoarding other things that people want or need, or other things that are bad for the environment to get. If the gold price rips, if Peter Schiff was right and gold goes to $5,000 an ounce in 2 years, a bunch of miners are just going to be incentivized to go rip up the forest floor and just dump more gold on the market. Like, it's actually, that's dilutive. That is that 2% inflation rate on gold. It makes it so it's not, this is where Saylor's talking about thermodynamics. It's not a thermodynamically sound monetary instrument if the supply is increasing. Once the last Bitcoin is mined, it has a half-life of forever. Gold has a half-life of 35 years if they're debasing it or adding to expanding the supply by 2% every year. You're losing 2% of the value in your real estate every year because you have 1% in maintenance and 1% in real estate tax, 2% in some jurisdictions, maybe more. Maybe California comes out and says, hey, our fiscal irresponsibility has driven us to the point where we're going to have to raise real estate taxes to 3%. All of you property owning, privileged individuals, you're going to have to chip in your fair share. You know what that is? That is quite literally property confiscation. That's, you need to give me some of your property. So another element that's so powerful with Bitcoin is the fact that it is invisible and it can go anywhere with you, which is also going to further incentivize fiscal prudence upon the service providers, aka the governments. So they can't as easily violate your Bitcoin as they can any other form of property that you have. So anyways, there's a lot there, but the basic cliff notes are, we live in a deflationary world. Supply is always going to satiate demand. Actually, I'll even go down a little other side road here. This incentive, this conundrum, deflation, the deflationary world that we live in, incentivizes regulatory moats, regulators and regulations being co-opted to build a moat around a sector in the marketplace. And insulin is the best example that I could think of. There are two companies. I'm pretty sure about this. I could be wrong. Let's say I'm not. The idea still, let's say I am wrong. The idea still stands. I believe there's two companies that hold the rights to use the insulin patent. They can produce insulin. They're the only two companies that can produce insulin and legally sell it. And so it's extremely profitable because they have access to a patent. But in a free market, a truly free market, insulin is so profitable that what would happen is states and local small jurisdictions, counties, municipalities, planning departments would say, hey, you know what? We want to license insulin producing laboratories. And all you got to do is you got to find the right location. It has to be sterile. You have to have the right equipment. You got to pass the right testing standards. We're going to come in and we're going to the EPA or whatever. Agencies are going to come inspect you and make sure you're good. Pay us a fee.
FDA.
Dude, the counties and the states, they want that economic activity. And if that happened, insulin's so profitable, so many people would produce insulin, it would dump a bunch of insulin onto the market and it would reduce its value, aka its cost. And then the two big mega companies that have the ability to produce insulin today would have a conundrum and their profits would go down. As Booth says, all items drop in cost to the marginal cost of production. And actually, with the fiat system, debt-based system, and Wall Street, it'll drop below that because you can access the capital to run your business at a loss. You can borrow money and you can sell shares on Wall Street and you can sell a product artificially and temporarily and only through a theft mechanism like debasement is the only way it's possible. But you can actually, for a while, run your business at a loss. You could sell a product into the marketplace for less than what it costs to produce it.
And then that allows the big corporations to bankrupt the little guys because the little guys can't stay in, they can't keep their head above water, while larger corporations can borrow and run at a loss for years, where a mom and pop shop, like you're kind of saying it before you got started here.
Totally. And that is why that's all of the pieces required to understand why we say things like fiat is a centralizing force. Because it allows for it creates this dynamic of you either get gobbled up by a bigger fish or you become the biggest fish in the business world. Like if you're Hanson Soda, your goal is to either become so big that you're capable of buying up your competitors using leverage and selling equity. So you're selling shares on Wall Street, you're diluting your company, and then you're borrowing money, you're shorting the dollar, and you're going long your own company. You're longing your stocks, your shares, your infrastructure, and you're shorting the dollar. So you're either going to gobble up smaller corporations, companies, whatever, businesses, that's centralizing, or you're going to be gobbled up. Your Hansons, and I don't know anything about Hansons. I'm just using this as an example of a mom and pop small soda company. I bet you, I would guess that somebody like Nestle bought them, because then the shareholders, the original founders of Hanson Soda or whatever mom and pop organic soda company, can get that proverbial fat check, that $100 million check, the $500 million, the $7 billion check. You know what they do immediately, going back to the whole 2-sentence topic that starts all of this? They go and buy a bunch of stuff, because the money, the currency, what we're being forced to use as a money is terrible. It's shitty. It's not a strong store of value. It's inflating in supply. It's a weak asset. It's a weak form of property. So you move out of that like a hot potato into things that are a stronger form of property: real estate, equities, gold, bonds, whatever, a diversified portfolio basket of whatever, right? Now, that's Bitcoin, because Bitcoin is the hardest asset in the marketplace. It is the least viable asset, economic instrument. It's the least viable thing that we could own that has ever existed.
It's almost,
and so
it's almost like fiat's forcing you. It's like forcing you into this, it's forcing the larger corporations in a race to become too big to fail, because they're incentivized to continue to steal. Because once it was like Grant Cardone said it, he's like in 2008, I owed the Bakes $50 million, and he goes, and when it came due, they were like, "Yo, we want our money," right? If I would have owed them $500 million, I would have been too big to fail, right? I would have been systemic and brought down the entire market because I was too big to fail. So next time, he goes, I'm not going to owe them $50 million. I'm going to owe them $1 billion, right? And I remember thinking, I didn't quite, I couldn't comprehend that. Where Bitcoin on the other side it actually incentivizes you to be more sound, to actually store the hardest currency and stay solvent, because the more of that you have on your balance sheet, the stronger your business becomes. It's like a complete paradigm shift.
Gosh, that's huge. Yes, that is, yes, big time. And so on that note, two things. Let's see if I can unpack this one efficiently. So by having $1 billion in debt versus $50 million in debt, Grant Cardone is insulating himself against essentially losing his position of property ownership. Even though he doesn't own all of the property, he only owns a percentage of the property and the bank owns the rest. By having $1 billion versus 50 million in debt to the bank, he's now too big to, quote unquote, too big to fail in this fundamental sense. If they were to foreclose on him in the event of a liquidity crisis, there actually isn't a buyer to buy that stuff. The market as a whole has a inability to access that cheap capital like they do typically when things are good, economically speaking, looking at it through the lens of this Keynesian paradigm. And when things are tight or interest rates are really high, like the environment we have now, mortgages are 8%, commercial mortgages are about to be, there's going to be an issue there, whatever. And this goes back to Jeff Booth's thesis. If the deflationary forces in the world actually take hold, and I mean, they are actually, you can't stop it. So this is happening. We're driving prices down, but the dollar denominated value of these things has to go up, right? And so this is so fascinating and profound for me, and I'm making like new connections, and I think that there's conversation happening with some of the thought leaders in the space, and I think some of the financial institutions, Jamie Dimons, Larry Finks, I think some people in the Treasury Reserve, I think Jason Lowry woke up government officials to this idea. If I can figure this out, very important people can figure this out. They have more cognitive bandwidth and resources than I do by orders of magnitude. So as an individual, instead of having debt and instead of having a mortgage, in a marketplace where there could be a pullback, I'm just a mini version, you could say, of Grant Cardone. I could have a $500,000 debt, a mortgage on a $750,000 house, instead of $5 billion on $75 billion worth of real estate. It's the same thing. It just scales up, right? That's actually yeah. So I think we could understand that. And in the event of a liquidity crisis, let's say we have a 2008 repeat, a COVID repeat, and they don't come through and double the money supply like they did on COVID, then what would happen? Well, the debt becomes insolvent. If I owned a $750,000 house that I owed $500,000 on, and we have a economic pullback, some sort of economic crisis, and the house is now worth $400,000, people like me or people in that position, actually, one, they might not be incentivized to pay the debt back, because why am I going to pay for this thing if it's going down in value? I'm actually just pissing my money away for something else, money I'll never get back, right? Or let's say in those circumstances, the velocity of the money and the economy would slow down so much that we would have that reckoning, that economic reckoning, that it's like we need to feel the pain. We need to take a dose of the medicine, or all these things that they say around, like, they need to stop bailing us out. We need to let these market forces equalize on their own. Well, the economy would slow down so much because there's not enough money in the system to service all the debt, that then it becomes apocalyptic. And this goes into Jason Lowry's thesis, the state and chain and custody of property. I think I said that right. That's how he says it. Who owns what now becomes in question. Because the banks in that situation, let's say the entire housing market goes underwater and everybody is upside down on average. Not everybody, because there's a lot of people that have paid for houses. There's a lot of people that have 50% of equity. There's some people who just bought a house and they only have 5% equity, right? But if the housing market falls in value, price, which it naturally is, and they don't bail out and eject or debase or whatever to keep that dollar denominated value going up, then the value of the asset backing the debt goes down below the amount of debt. what would happen is you'd have mayhem on the streets. It would be apocalyptic, and the banks can't take back all those houses. They couldn't foreclose on the entire American market or half the people who are underwater because there's nobody to buy the houses. So then it becomes apocalypse. Who owns what? Well, it's going to be the guy down the street who's the sociopath who's willing and has the most 5.56 and breastplate carriers and walks up and down the street and says, these houses are mine. You live in my neighborhood now. So you can't have that happen. We actually don't want that to happen. As much as we think, fuck the banks and all these people and all their theft and whatever, it's a runaway train based upon a technological limitation of gold. And then a few people, it created a honeypot of people who were willing to rent seek and lie, cheat, and steal. And they just started issuing essentially started issuing more certificates than they had gold on reserve. And as long as there wasn't a bank run, they got away with it. Well, there was bank runs, and it was wildcat banking, and then the Titanic was sunk, and then the Federal Reserve was founded, and then blah, 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 world wars, and people died, and world reserve currency. And then in 1971, whoops, we don't even need the gold anymore. Is there gold? I don't know. Maybe not. Maybe there is. Whatever. We got the gold. 31 or in the 30s, Eisenhower, give us all your gold. We need the gold. Blah, blah, blah. Anyways, it's just a broken system based upon a technological shortcoming, as far as I can tell. And so here's where Bitcoin comes in. If a few things are taking place, because you have scarcity and money, and you're creating abundance and everything else. And what's taking place is it started from the bottom up. It's a bottom up and now a top down dynamic where it's literally closing in on our whole world, and everything is getting sucked in economically into Bitcoin as a store of value asset. What's happening is that plebs, peasants, just everyday people like me, I'm buying Bitcoin instead of buying equities. I don't own any Apple stock. I don't own shares in Tesla. I don't own government bonds. I don't own gold. I don't own silver. I don't own houses. I don't own anything other than the two vehicles my wife and my family need. I own a smoker so I can smoke briskets. I got a nice cutting board, some knives, some basic. I got clothes. I have to have clothes. Obviously, I got a refrigerator, some basic needs right there, obviously. But I don't own anything else as far as an investable asset or really as a money other than Bitcoin. And BlackRock is now doing this because BlackRock is a fund that's managing people's money. Well, they actually weren't managing people's money because the money's abundant and it's creating scarcity and everything else. They're managing stuff that's denominated in money or worth money, has a dollar denominated amount. It's a dollar derivative. So in order for them to be successful, they need to continue to effectively manage stuff that's worth money or convertible into money or other stuff. And now that the best asset is Bitcoin. So instead of buying more single family units, they're stacking sats. And as they do that, and I believe banks are going to start stacking sats, and I believe banks are going to start loaning money into the marketplace against Bitcoin because Bitcoin is better collateral than a house is. Because if somebody gets into a car accident and they get opioids from their doctor and then they lose their job and they can't pay the mortgage, the bank has to foreclose on them. And maybe they were in the middle of remodeling their kitchen because they were really ambitious and they ripped the stove out and there's no cabinets and they got a brand new Viking range that was bought on a credit card that's not paid off. And there they are all whacked out on opiates and they're on their way to be homeless, right? And dude, the bank's like, we need to take this house back from you, you fucking drug addict peasant. You can't pay the bills. The sheriff's knocking on the door with an eviction notice. Well, the bank has to sell that house to get a portion of the money back. And so that's also the evaporation of life force and capital. Saylor refers to our money system as being toxic. It's bleeding energy. It's just, it's volatile. It's just poof, just going into thin air. And that, you think about that. So if the bank takes back a house, let's say it's a guy who owns 500 grand, owes 500 grand on a $600,000 house, loses his job, gets put onto the streets. He's living in an RV in LA somewhere, right? And it's a sad story. And
they've already
the bank takes back the house. Yeah, the money was printed into existence, but they take the house back and then they're going to sell it as a foreclosure for 250 grand because half the house doesn't have sheetrock and the kitchen's ripped apart. So that money is just evaporated. Like when Yeah, when,
So Pete.
gosh, it's so crazy too with like COVID, when all of these, a lot of defaults in the system took place, is that's just the evaporation of wealth. It's like we're bleeding out energy that is representative of people's life force. Even if the money is being debased, you're sending money into the marketplace. The money is just representative of the wealth or the energy within the marketplace. So as the new money is created and put into it, it is capturing some of the existing wealth and energy within the marketplace. And as the money gets poofed out of existence because of fiscal irresponsibility, it is an evaporative, volatile loss of life force or energy, going back to thermodynamics and looking at money and this world through the lens of channeling energy. So anyways,
So
as
let
they
me.
loan money, yeah, go ahead. Yeah.
No, I
I'm
want to
with
dive
you.
into that a little bit. So, like, you go and you take out a loan. Say it's $1 million loan, right? You go to buy a house, you put your 20% down, so you borrowed basically 900,000. That's the obligated debt. Well, because you now
Yeah.
owe that, right? That's your certified obligated debt to the bank, your CDOs, and then that allows them to loan out 900,000 of it, right? Even in like a 10% fractional reserve banking, they're now able to loan $900,000 more into existence. So then they loan 800,000 of that and 700,000 of that in fractional reserve banking. But if the first person defaults on their house, then technically it would need to evaporate all that extra money that's in the economy. But it doesn't, right? So you just take out that one person, but down that you see what I'm saying? It's like a 10-to-1 cascading landslide if one person defaults. Like the ripples that should come from that. Or
Yeah,
am I
gosh,
thinking
that's
about that
really
wrong?
interesting. I don't know. I understand. I can visualize the dynamic that you're speaking to, and I don't know. I haven't really thought about that one necessarily. Well, the monetary units that are being lent into existence, I think that the fractional reserve banking system and that monetary policy is essentially the policy set into effect to keep the currency supply expanding at a fast enough rate to keep the dollar denominated value of the assets going up fast enough so that the debt stays solvent. However, there isn't enough units within the system to pay back the debt and the interest. So it is like an ultimate form of theft. And what's very crazy too is if you think about it, essentially America doesn't own a whole lot. The central bank or whatever financial institutions are holding the titles to the real estate. They hold 80%, 90% of all of the equity in the housing market is not actually owned by Americans. It's owned by financial institutions because the housing market or the everyday Americans owe all that money to the financial institutions, who are essentially given the ability to print money out of thin air and loan it to you so that then you buy the house, but they then own the house because it's collateralizing the debt. Actually, we don't really own anything. They already own it all. So if you look at this from the perspective of you'll own nothing and be happy, we already own nothing and we're not happy. So
Yeah.
yeah, it's a trip. And so check this out though. This is where and this is like this is just my opinion, man, and what I think, but Jerome Powell needs to keep, or the system at large, and he's the face of the reserve, the Federal Reserve, and the policy implementer, whatever, and the system needs to keep the dollar denominated value of the assets appreciating, but only so fast. We don't need housing and equities that are backing the debt to go up at 10, 15% or 7%. It just needs to go up fast enough. Maybe that's that 2% target. I don't know. I'm not a Keynesian economist, and I'm glad I'm not. And so it's nebulous. It doesn't make sense. It's super ambiguous. It's mathematically flawed, blah, blah, blah. But it doesn't need to go up that fast. And so the problem is, though, is that with our banking system and with the amount of liabilities within the system and the amount of easing or printing required or liquidity injection, all the same thing, required to keep those asset prices propped up, as they say, the amount required to do so is driving up prices on everything else too fast because there's more money going into the marketplace. You're moving, the incentive is to move out of the money and into other things as fast as you possibly can. and it's abundance in money, it's creating scarcity in everything, right? Well, if we have an escape valve, or we have an asset that is better collateral than the house that fictitious individual went into default on because he got fucked up on opioids, if the collateral is Bitcoin and it's not a house, and there's a default, a few things take place. If there's a default, the bank can sell it 24/7, 365 to anybody in the marketplace, not somebody looking to buy a foreclosure in that particular jurisdiction or that location. You can't rip the kitchen out of your Bitcoin and degrade its value. And its stock to flow currently makes it the hardest asset on planet Earth. So it's the rate in which the supply is increasing, the debasement taking place is so low that it's the supreme asset. It's the apex property of the human race. So as an individual, by me having Bitcoin on my balance sheet or as my savings technology, the appreciation on my balance sheet, and this is very important, and as I say it, I'm even realizing how much it means even more, and I've said this so many times. The appreciation taking place on my balance sheet is so tremendous. Let's use a Trump word. Tremendous. So with his little hands, it's tremendous. It's just, it's the best. It's the biggest ever. It's the most amazing. We have the most people ever. It's the most appreciation you could ever have on your balance sheet, right? It's so tremendous that it's offsetting the deflationary forces or the loss on my P&L, right? So my ability to make money is decreasing. Everybody's ability to make money is going down. It's getting harder just because of the monetary technology. Banks have an issue where they're lending money into existence. It's becoming harder for banks to make money. The government drives up its own prices as it debases the currency through its monetary policy. As the government comes up with another $1.2 trillion spending bill, that means next year their cost of operating the government has gone up, requiring more debasement. It's a runaway train. It's a broken feedback loop, right?
Yeah, it is.
And so, however, if you save in Bitcoin, you HODL, you adopt it as a treasury reserve asset, you put it on the balance sheet, the appreciation on the Bitcoin is so tremendous that it's offsetting the loss everywhere else in the marketplace. And what's happening is me as an example, let's say I did own a home and the value of the house went down from 700K to 400K and I owed 500 grand on it. But if I have a bunch of Bitcoin that's, I don't know, worth a couple $100,000, I actually, as a business or an individual, am in equity. I'm solvent. The Bitcoin trades 24/7, 365. I could sell some of that Bitcoin to cover a liability. Some guy in Bangladesh might buy it. A billionaire in Manhattan or a billionaire in Miami or in wherever, China. It doesn't matter. They'll buy it 24/7, 365. And so as the government puts, and this is what I believe is going to take place, is that financial institutions are going to start loaning dollars into existence against Bitcoin. It allows banks to take possession of Bitcoin because the Bitcoin has to collateralize the debt. And there are a lot of people, and gosh, there are some Bitcoin maxis. If any of them hear me say this, they're going to lose their fucking mind. But I would just suggest they think a little longer about it. I am so freedom-minded. I am so anti-theft, plunder, tradfi, all the things. So this is what was really interesting, though, is that if they loan money into existence as debt against Bitcoin, it's better collateral for the financial institutions. The asset that's collateralizing the debt is appreciating at such a fast rate. And as other countries move on to the Bitcoin standard, as the grand, great, tremendous, huge, biggest ever, as Trump would say, demonetization in all of human history is taking place, the Bitcoin is going to shred, right? And if the Bitcoin shreds and Bitcoin's on the balance sheet and Bitcoin is what's collateralizing the debt, it's the treasury reserve asset. It's bringing solvency back into an insolvent system. So financial
even
institutions,
a solvent system that's leaking, it's bringing that more solvent at a faster rate than it's leaking.
Yes.
It's pretty.
because it's two systems overlapping. You got one system that doesn't work, but another one's coming in on top of it that's actually like patching over it, fixing it, repairing it, but also at the same time making it long-term irrelevant. So it's fixing fiat at the same time that it kills it, destroys it, and replaces it. So it's not Bitcoin or fiat. It's not Bitcoin or slavery. It's Bitcoin. It's here. It's done. We fucking won. Jamie Dimon is lying to you when he goes on CNBC and says, oh, Satoshi's going to come back and double it to 42 million coins. This is the CEO of JP Morgan Chase. This guy famously wakes up every morning and reads for a couple hours. That's his job to understand what's happening in the world of money. I promise you, he knows about Bitcoin. And then if you look and say, don't listen to what they say, watch what they do. He's working with COINBASE and BlackRock, and he's trying to figure out how he's going to be in the custodian game and get his piece and whatever. And this is, gosh, there's so much to this. He's also, I do truly
building his own blockchain. Like, I mean, he doesn't fuck around. He's very well educated.
Well, blockchain's not Bitcoin. No. Blockchain is an inefficient distributed ledger technology, which is really only important if you're using that ledger to protect the state and chain and custody of who owns what, aka the world's money. You don't need a blockchain for real estate. You don't need a blockchain for land in the metaverse. All that is ridiculous. And it's more efficient to just put it on a centralized database. If it's a proof of stake coin or protocol or blockchain, then that means it's centrally controlled. It's more efficient just to put it on a central server. If it's centrally controlled, then what's the point of having a centrally controlled decentralized ledger? It doesn't make any sense. It's oxymoronic. It's fucking a flawed premise, something along those lines. So here's the kicker, though. I want to just drive this point home. Gosh, I'm like Trump. It's like Trump. Let's drive this point home. It's the biggest deal ever. It's the biggest deal in human history. So if they loan money into existence as debt against Bitcoin, and the Bitcoin goes on the balance sheet of the financial institutions, and if the Bitcoin's a treasury reserve asset for the nation states, Bitcoin's a treasury reserve asset for the corporations, and I promise you the corporations are coming, and they're coming in droves. The accounting changing is at the end of the year. That's a whole other topic to unpack. That's a little bit profound. I think the everyday individual doesn't quite understand how the implications of accounting rules changing for corporations, but holy moly, that's a big one. So as Bitcoin hits the balance sheet for everybody, an individual like me, a small business, a large business, small corp, large corp, small nation state, large nation state, financial institutions, and then the banking bloodlines, as the entire world puts Bitcoin onto the balance sheet, every time another individual uploads their economic energy into the network, it pumps the value of the whole network, right? And so it's appreciating. And it pertains to fiat and the runaway train, the broken paradigm, and the conundrum we have with our economic system today. We need to keep the dollar-denominated value, and this is controversial, and some people may not like hearing this, but it's coming from the perspective of if it doesn't go down this way, it's apocalyptic, and the people with the guns are going to take all your shit, because we need to keep the system. You can't just turn fiat off and turn Bitcoin on. And actually, the great replacement is happening right in front of our eyes. So the dollar-denominated value of the assets has to continue to go up. Otherwise, some thug is going to come and take your house from you. You may want to see the banks go out of business, and I promise you, I understand why you may feel that way. But I promise you actually don't want what happens if the banks go out of business and the government goes out of business and they don't protect you from the thugs who will just come in and steal your shit. So we need the dollar-denominated value of the assets to go up a little bit, but not too fast. So we need to debase the currency at an exponential rate to inflate away the debt, and Bitcoin is the instrument that's going to do that. If housing goes up 5x over the next 2 years, people are going to be homeless. They can't afford housing. It's a monumental issue. If Bitcoin, as some arbitrary extreme example, goes up 100x in the next year, and it's 70 million a coin, that doesn't hurt anybody. And you might think that's a threat to the governments. That's a threat to the central banks. It's not if they have it on the balance sheet. And so Bitcoin, because inflation is a vector, and the inflationary rates or deflationary rates The amount in which an asset or a good or a service is going up or down within the marketplace globally is different for every single thing for sale in the marketplace in every single jurisdiction in the marketplace. It's quite a big thing to wrap your mind around, but if you zoom out and picture yourself sitting on the moon and looking down at planet Earth, there's only so many little markets and only so many things for sale, really, right? Like, it's very easy to get lost in the world because we're kind of looking at the world through the lens of a microscope. But if you zoom out and you just look at our market, our civilization, there really is only so much stuff. And so if the Bitcoin goes up at some crazy rate, it doesn't cause any problems because it's an invisible thing, right? And so it allows for the dollar denominated debasement to happen at the rate in which it's set to. It has to exponentially continue to inflate. The Bitcoin is going to capture that inflation, and it's going to take a lot of it. And it's already happening. It's taking it from housing. It's taking it from gold. Like, if Bitcoin didn't exist, gold would probably be a $20 trillion market instead of what I think it's 15 today is what the dollar denominated market cap is of gold.
Yeah, probably close.
Let's say it was 12 recently. I heard someone say it was 15. I guess gold pumped, whatever, right? And so if Bitcoin didn't exist, gold would be capturing that store of value. Equities would have a lot more of that money. Real estate would have a lot more of that economic energy. And so Bitcoin's like this orange portal just sucking economic energy from the rest of the world into its network because its monetary properties are orders of magnitude better than any other thing that exists. And so Bitcoin allows for the currency to continue to inflate as fast as it has to. It'll likely be used to collateralize the debt, bringing solvency back into an entirely insolvent world, where I think Booth says there's $400 to $600 trillion in insolvent, unpayable debt in the world. The money to pay that, the currency to pay that debt back plus the interest doesn't exist. So it's already insolvent. The system is already insolvent. It already fundamentally is broken. It doesn't work. But we have to get out of this position. And this understanding kind of helps me to sympathize a little bit more with the buffoons that get on national television and fucking lie to our faces about what they're trying to do in an attempt to fix the problems in the economy. I assure you, Jerome Powell or the current Biden administration, these people, although they may have a sincere level of contempt for the peasant class because we're weak and stupid, generally speaking, that may be real. But I promise you, they don't want the whole thing to fall apart. They don't want mayhem on the streets. They don't want to have to reduce the population from 8 billion people to 500 million. That's not easy to do. It's not easy to do. And I think that what's taking place is that there is a mass realization that Bitcoin is the technological solution to this conundrum that we have. And at first glance, you could say that it's logical to deduce that most people in a position of political power, aka the overlords, world leaders, whatever, the elites, may have a problem with the fact that Bitcoin is an escape valve. It's like a hole in the fence that allows us to like escape this open air prison that we're all living in. But it's not because that they put us into some open air prison intentionally per se, maybe, but it's predicated upon a technological shortcoming and a technological limitation of the monetary technology that we've been using for thousands of years. And that's a dumb, yellow, shiny rock that doesn't do anything.
Yeah.
And so, yeah, what'll happen is where we have scarcity and money, and now we do, we're going to create abundance and everything else. The money is going to appreciate at such a fast rate that it's going to bring solvency back into an insolvent system. It's going to incentivize us to save the money and not hoard other things that people want, liberating us from this scarcity paradigm. I call it the BB world before Bitcoin. Since the beginning of time, we didn't have the technological solution. Look, we're squirrels. We're metaphorically squirrels just navigating through the proverbial forest of life, collecting acorns, nuts, whatever, to survive the winter. And once you, as your little squirrel self, get enough nuts for one winter, if you're halfway through the summer, you don't just stop and start sipping pina coladas on your little squirrel riverfront beach or something. You just keep going out into the proverbial forest to get more nuts. And if that means that Tony the squirrel down the way doesn't have enough nuts, you might default to a place of compassion and create some sort of consensual exchange. Well, hey, you want to help sweep my front porch? I'll give you some nuts, whatever. But like the reality is that we're all competing in this realm of scarcity, and some people aren't willing to share the nuts, and they're going to save 2 years, 3 years, 5 years, 10 years. It's never enough. You hear these people say, oh, it's never enough. Well, I understand that, and because if you don't take your share, someone else will. So it's the game theoretic conundrum. So it does create scarcity. There is an element of scarcity, but now the fact that you can save an invisible acorn that's convertible into other acorns, because then the other squirrels can take that invisible monetary instrument and use it to buy a new house or buy a thing or whatever, right? Like you can hoard this thing, and the hoarding of it is actually good for everybody else because you're pulling those monetary units out of the marketplace, further strengthening the network. You're making it so that there's less of those units chasing the rest of the goods and services in the marketplace, strengthening it. And it's invisible, so the hoarding of it doesn't cause any issues. It's not like, oh, we can't build enough iPhones or computing devices because everybody's hoarding all the gold. It's not like, oh, we don't have enough housing for the homeless people because Grant Cardone just bought another 10,000 of them. Well, why is he buying the houses? I'll tell you right now, it's not sexy to own a bunch of sheetrock and lumber. Like, that's a pretty fucking unattractive thing. Like, why this guy doesn't wake up in the morning and just get off like, oh yeah, I'm so fulfilled internally because I have all this sheetrock and lumber and paint. Oh my gosh, I just bought another 10,000 fucking roofs. Dude, yeah. I'm so taken back and infatuated with this like asphalt tar mix that they put on the roofs of these houses. I'm just enthralled. I'm going to spend the rest of my life thinking about how amazing all these roofs are. No, are you kidding me, dude? It's just a strategy to figure out how to come up in the game, dude. We live in an energy in, energy out world. And so now that you can hoard this metaphysical monetary instrument that's a thermodynamically sound instrument with a network that has no energy loss, and all you need for this network to work is for you to trust that humans will always serve their self-interest first. And the first time in human history, this aligns the
economic incentives of every single man on earth. It literally incentivizes it economically incentivizes every market actor in the entire world to participate in the system, because anybody that participates in that system, everybody wins together. Versus in the other system, you're incentivized to steal, and you're incentivized to figure out how to game the system, because if you're not gaming the system, somebody else is, and you're going to lose your piece of the pie.
Totally.
And then
you have to learn how to take, or you'll be taken from. Yeah, at the very least, protect yourself from being taken from.
And it's shining a light on anybody that opposes it, right? It's like it's the good versus the evil, and it's so good that anybody that tries to attack the good, it's just shining a light on their own corruption, right? So it's the more broken the system is, the more they're going to try to prevent you from leaving that system, right? So it's almost like once you open that escape valve from the matrix, anybody that tries to then stop you from entering that becomes the bad person, and it becomes overwhelmingly obvious. Does that make sense? Am I saying that right?
You are. I also do think, though, that they want you in Bitcoin. And I know that that's a very controversial thing to say. I think they want you in Bitcoin. I think that they just don't want you to know that yet, which is why Gary G is letting you get wrecked buying unregistered securities like Solana. It's because it's the only way to dilute the Bitcoin price while they're developing a significant strategy and position. But I do think that ultimately they want you in Bitcoin. They want you to have Bitcoin as a treasury reserve asset, because then you're not a peasant that they have contempt for, who is weak, that they have to take care of, and who wants that. They would, and there are people who are in political positions of power who want our country to succeed. They want our civilization to succeed. They're not all child molesting friends of Jeffrey Epstein. They're not all shitbags. There are people who go into this attempting to solve a problem, but the technological solution didn't exist until now. And so, yeah, well, and I wanted to add, and what's on our last topic there, Bitcoin is aligning what's best for the self-interest of the individual for what's best for the interest of the collective for the first time in human history.
Some good notes.
For the first time in human history, now what's best for the individual to get the most is also what's best for our entire civilization. And that's never existed pre-Bitcoin because we hadn't merged the physical world with the metaphysical world. We hadn't found that's a little, you could say it's a little woo-woo, but you know, what is information flying through cyberspace? It's informational. I look at this as you have two realms that we're messing with. We have this invisible realm where information is flowing. Where do your thoughts get stored? Like how is it that I could tell you something and sound reverberations come out of my mouth? I give you a data packet and you hear that and you can unpack that and now you have information, right? And so that information in a sense is metaphysical. And now I can send you something that is of substance. It's matter, but it's informational. It's invisible, but it's a bearer instrument. I now don't, if I give you Bitcoin, I don't have it and you do. And so, yeah, it's dude, it's quite profound stuff, but I do firmly believe in, and this is just my opinion, but I think I've thought long and hard about this. It actually may be the thing I think the most about because it has the most relevance on me in my life. How do the current people in the positions of power, how do the Rothschilds, how do the shareholders in the Federal Reserve, how do the politicians, the royalty bloodlines, the overlords, how do they respond to Bitcoin? Well, do they lock us all up and put us in key extraction camps? I don't think that's likely. Yeah, I understand. Do they try to confiscate it? 6102, everybody, national security, we're going to war. You need to let us buy your gold from you. It's national security. You need to do your fair part. I don't think that that's likely either because you can't actually get the Bitcoin. And yet, how do you even prove somebody has the Bitcoin? You're buying Bitcoin. Let's say it's all KYC. You buy it on COINBASE. Or let's say you don't like COINBASE. You buy it on Strike, whatever, Swan, River, whatever. You send it into cold storage. Well, you're probably sophisticated enough to spin up a new receiving address every time you do it. Are you paying for something? Did you send it to the right address? Do you have the keys for that wallet? Is it multiple wallets? Is it one wallet? Is it a multi-sig? Did you memorize the words? Did you forget the words? Did you go boating? Right? And so you can't prove that somebody has it. So it's not very energy efficient to attempt to steal the Bitcoin from the people who have the Bitcoin. Bitcoin is also not the world reserve money. Gold was. So confiscating the gold to fund a war to actually maintain that position of economic power where we're printing money and essentially sending it. We're producing money for a less energy. This goes back to energy. We're producing money, or were, and we still are, producing money for a less energy expenditure than the economies that are producing the goods or services that we're trading that money for. So it's an unfair trade advantage. It's in some sense it's stealing, but you could just say that it's just a Darwinian element, dynamic. It's just a thing in the market. We're competing in the marketplace, and the United States, you could say, has won that game. Now they've had to do so through death and destruction because other people are like, yo, I don't want to send you my stuff while you keep sending me these dollars because we're kind of getting screwed here, right? Mm-hmm. So Bitcoin, we're all playing the same game. Yeah, I don't think, as far as 6102, I don't think that they could come to the marketplace and be like, first off, we're going to ban the Bitcoin. It has no monetary value that we approve. And we need you to give it to us because we need to take possession of it because it's too valuable or it has no value. What's the story? I don't even understand what the story would be. Yeah, how would you? Okay, well, we're gonna buy it from you because we don't want you to have it because it's too. Oh, we're gonna buy it from you because it's national security. Well, also, if we do that to our own people, there are people in the United States government who don't want the United States to fall. Now, maybe a lot of them do, and maybe there's some sort of diabolical plan in place. But
Yeah,
at the same
blackmail.
time, it's not everybody if that's the case, right? And
Yeah.
so we would put ourselves at an enormous game theoretic disadvantage in the marketplace against other nation states like El Salvador, like have some Bitcoin. As a matter of fact, we don't even tax you to use it. We want everybody to have it. You got Bhutan is mining coins. What's Qatar doing? They're producing oil. You think Qatar, you think the oil producing nations want to keep selling something that has real world value, oil that's very valuable for dollars that we're just printing out of thin air? That's so like it's an unfair trade advantage. They're going to want Bitcoin. It would just put us at an enormous disadvantage in the market if the government tried to confiscate the Bitcoin. They don't get it. Let's say they try to confiscate the Bitcoin that these 11 funds have. I don't know, what is it, 5 or 6 of them are using Coinbase? Oh, it's a big honeypot. I understand that. Everything that's ever come before Bitcoin and all of human history that was good was corrupted. Okay, fair enough. That's a logical thing to think. It's that they're going to corrupt it. This is well, first off, we want the entire world to come into Bitcoin, right? Isn't that what everybody wants? That's what we want. That's what we want to see. So why are we shitting our pants when BlackRock comes into Bitcoin? Okay. Oh, well, the government's going to confiscate the coins. All right, well, let's just dissect that a little bit. BlackRock is an entity that is participating in the market, an energy in, energy out world that wants to, quote unquote, come up in the game. And if they allowed the coins that they're selling the rights to be confiscated, at some point it would be the demise of BlackRock. And I don't know that BlackRock wants to go out of business. And let's say that they did, it was some evil diabolical plan to steal 5% of the Bitcoin supply. Who the government steals it? And then what? They have to spend it into the market for it to have any value. They have to adopt it as a treasury reserve and back the dollar with it to have any value. That says to the world it has value, right? Wouldn't it just make sense to just let BlackRock? And then also, Japan, China, I don't know, some other big country, some nations, they're in the midst of approving ETFs. So then other hedge funds,
it's Hong Kong.
Yeah, China. Yeah. Other hedge funds are going to then have an advantage over people. Are going to be like, oh, I want to, you got dual citizens. Oh, I'm just going to use my hedge fund over here. I'm going to, call my money manager. Hey, could you stick $2 billion into Bitcoin? Oh yeah. So that's bad for BlackRock. Larry Fink didn't hit his head the morning that the ETFs were approved and become a loser. This guy's a winner. He's winning based upon the incentives built into the game that he is playing. And now the game's changed. And so somebody who has become as successful as he has, it would be logical to think that he's capable of pivoting his business strategy if the rules of the game changed. And they have, because now we have a new monetary instrument contending in the marketplace. And so the other thing, too, is that the reason that people think that they would need a 6102 and confiscate the Bitcoin is because we have a fundamentally insolvent system. Because Bitcoin is a escape valve allowing you to hedge yourself against the debasement, to obtain some sort of high level of sovereignty and property rights. Well, let's not forget, this is a country built upon a high level of sovereignty and property rights. This is a system. Oh gosh, that's just so profound. So many thoughts there. I lost that train of thought, but I'll continue on. I'll just skip forward here. They can loan money into the marketplace, right? And they have to keep loaning money into the marketplace. And so if they want the coins, the best way. Oh yeah, so if you're gonna confiscate the coins, you're gonna confiscate the coins because you're gonna back the insolvent debt with it, right? That's the only thing that makes sense. Or you're gonna stop people from using it. But if you allow people to use it and you back the debt with it and you adopt it as a treasury reserve asset, then it's okay. Then you actually want people to use it. Hey, I'm going to put it on my balance sheet. And by the way, could you guys buy a bunch of it so you pump my bags? And actually, could you guys buy a bunch of it so that the inflation on Bitcoin goes up and the inflation on houses isn't too much because we got a homeless crisis? Mm-hmm. Yeah, it's only a problem if people don't adopt it. And here's the other thing. You can't ban it. You can only ban yourself from it. And it's not a threat. It's a solution. They want you to have Bitcoin. They don't want you to be a poor, starving peasant that needs insulin, that needs subsidized housing. It's a conundrum. Dude, I assure you, the political regime wakes up every morning and goes into work like, oh, we got so many problems. Like, this not enjoyable. They're not like having a great time in Washington just celebrating the demise and the suffering of all the peasants. It's not like, oh, yeah, all our peasants are getting fucked and we're so happy and let's drink more drinks and go hang out with more Epsteins. No, I think it's a conundrum our entire civilization has. We didn't have a monetary instrument, a technological solution to the problem of how do we trade fairly. We do now. And it's a solution for everybody. Dude, the banking bloodlines have the same problem you and I have, man. They don't want to have someone kill them and steal their stuff. It's that simple. No one wants to be plundered. Bitcoin's the best hedge against that. It's the best hedge against that. It's the only money our world's ever had. We've been using other things as a money, but really the dollar is just like 2 steps ahead of a seashell or a glass bead. It's literally an L2 on gold. The dollar is an L2 on gold. And because people are pretty easy to, I don't know, deceive somewhat, it gets a little nebulous. And we're also like, there's so much noise and distortion in the world because if you're in a position of power and you're co-opting a central banking system to steal, you want to confuse people. We all know we're getting screwed.
Yeah, look at it.
We all know we're getting screwed. Yeah, and I would argue that as despicable as all that is, a significant percentage of the idiots in that, because we're all idiots, dude. I'm just a dumb fuck trying not to be poisoned and stolen from and lied to. What the fuck do I know, dude? Like, Jesus, I'm just a dummy trying to, I want to make it and I want to be okay. I want to have kids and not be poor. It's not that crazy, right? You're trying to figure out. A lot of these idiots in that room, they think that they're doing something that is good. I don't think most people have thought long enough and hard enough about what the long-term implications of this thing are, but I'll tell you right now, if you're in Congress or you're in the government, you have a high level of discipline and the ability to make it through school, the ability to you have basic business acumen, you're socially astute, you know how to connect with other people and serve your self-interest. And so these individuals, as much as they might be scummy, as much as their perpetual scumbaggery is just so destructive and atrocious and whatever, as much as Hillary should be in prison or whatever, right? They're just trying to serve their self-interest and they're capable of figuring it out. And I honestly believe, like, here's another thing too, and why, like, somebody was like, hey, don't say bifurcated. Elizabeth Warren says, I don't pay attention to these fucking people. Like, dude, they're literally, it's a bunch of nonsense, trying to make sense of a runaway train, trying to make sense of the conundrums or the limitations imposed upon our civilization based upon a technological shortcoming. It's literally all irrelevant. None of it matters. All of the dialogue about this law, that law, and this is, it's almost like this is a homage to Jeff Booth. Like most of these things, Saylor and Jeff Booth, I would say that the basic thing, all of the concepts that I have been able to understand, the forces that we're contending with in our world, my understanding of these forces, once again, it's just my opinion, but this seems to make a lot of sense to me. I would have to give a major thanks to Saylor and the Saylor series and all of his 1-hour keynotes, especially ones where he's got slides over the last couple of years, and Jeff Booth. And so all of this stuff, it doesn't matter because it's not the solution. Bitcoin, like, I don't care about the laws. I mean, I could say I care somewhat, and I think that in the interim, in the short period, a more nationalistic leader as opposed to a globalistic leader is better. Somebody who's more capitalistic and more favorable to stimulating capitalistic endeavors within the marketplace is somebody more favorable to somebody who's more communistic. But I don't care if you have a Republican, capitalistic, orange, blonde-haired politician in position of power while we have a central bank. We're essentially a half capitalist, a half communistic market right out of the gate. We have a
Yep.
centralized authority meddling in the money supply, affecting our economy. That's not a free market capitalistic society.
Nope.
But none of that really matters long term, because Bitcoin is, and this is, Eric Kaysen says this, it is the ultimate form of law, superseding every law to ever come before it.
Wow,
It
that's good.
is the wall of reality. It is literally the thing that every politician or person in a position of power will run into that doesn't give a fuck about their position of power. Bitcoin is like, it's the rules of the universe. It's like gravity. I assure you, a dictator, like, I don't know, dictator in North Korea, he
Yep.
won't drive off a cliff because he'll die. Our politicians won't drive off a cliff because they'll die and it's irreversible. But they will drive a capitalistic or a business or an entrepreneurial venture, or they will fund something that goes off a cliff, because the death and destruction in that misallocation of capital or energy gets put on to the peasant class. It's like literally like our politicians, our fiscally irresponsible politicians, are driving off of a cliff. Instead of them dying, some guy in LA who's working a paycheck to paycheck life dies instead.
Yeah, and they get all its life savings.
Absolutely crazy. Yeah. And so if you misallocate Bitcoin, the only way to get the Bitcoin back is to buy more or mine more, or trade something of value with someone else who has the Bitcoin, who's willing to give it to you. So it literally checkmates all of the funny business and clown world that we have.
Checkmate.
And like, for me, my deep, and it's progressively every day a deeper understanding of this, because it's also profound. And there's so much inverting in the incentive structure and inverting in way that the marketplace works, requiring you to wire new neural pathways together, to have new thoughts. Like, understanding a deflationary marketplace is like learning how to play the piano. Like, your brain hasn't ever thought about these things. We think about housing as going up in value. To realize that the housing is going down in value requires you to do a new mathematical equation in your head. It's as painful as sitting there in third period as an 11th grader listening to your math teacher try to get you to read a paragraph and solve the algebraic equation. It takes energy. It's hard to do. It's not easy. And so, yeah, the more and more of that understanding that I adopt, the more of a blissful life experience that I have. Not to mention, I'll just say it, it's like the most impactful, most important, but also like and most relevant, but also like the least important or attractive thing about all of this. I'm getting wealthier at a faster rate with less energy expenditure because all I do is buy sats. It's easy. It's the easy strategy. Yeah, I got to have some sort of business venture. I got to go to the marketplace. I got to provide value. I got to earn money. But as far as a treasury reserve strategy, it's the best one by a long shot. And so
Yeah,
it's also
it's like you're stacking sats to save humanity. It really is in the big
absolutely
picture, you know,
and increase my quality of life at the same time that I increase the quality of life of the world around me.
Yes.
It's the most, and it's not an attack on the nation state. It's not an attack on central banking. It's participating in a technological solution to the problem that our entire civilization has. Jeff Booth said it. There is no they, it's just us.
Say that one more time.
Go
back that last sentence. It's what?
It's Bitcoin is what did I just say?
Well,
there is no they, it's just us.
Yeah, it was right before that.
That's what Jeff Booth said. Yeah, Bitcoin is a technological solution to the limitations in our world. Like, it's literally, it is the solution. Oh man, what did I say? That's whatever it was I just said. It was the first time I'd ever said it like that. Yeah, me too. Where how far in are we? That was good. I've never said that before.
49 seconds in, to be exact. So, or a minute and 49 minutes. Yep. So it's probably 147, 148. But yeah, I'm gonna go back. I'm literally,
Yeah.
I'm taking so many notes over here, but sometimes I just stop and I'm just like, I'm just going to have to go rewatch this again to let it all sink in. It's really good, man.
Totally. Yeah, this is a really fun one.
You were
I
on the thought
I was in El
process of
Salvador.
Bitcoin reprograms your neurological pathways into your brain, and you're thinking that thought, you're rethinking that for the first time. And you're like, Bitcoin is a technological solution.
Yeah, it is.
something.
It's a technological solution to whatever, like, I don't know, limitation we hit in our civilization.
Yeah.
You know, it's a solution for everybody. It's a solution. Like, we're all in this together. Like, there are people in positions of power that are serving their self-interest at the expense of others. And that also creates the issue within the marketplace where you're at a disadvantage against those people. And you either have to do as they do or figure out how to protect yourself against that theft or that plunder. And there's a certain element of, like, I think something breaks inside of people. You know, Sailor said, you know, you don't want to be a martyr, you want to be a winner.
Yeah.
But some people in the BB world, the before Bitcoin world, all of known history, break. They just, something breaks inside of them where they've been stolen from and lied to enough to where, like, they're just like, you know what? Fuck it. I'm going to go out and get mine and I don't care. And then all of a sudden you have this combative business dynamic where you're just trying to figure out how to get somebody to work on your car. And he's thinking in the back of his head, I'm going to fucking stick it to this guy. Why are we, you know, like, why? And so it's a real issue. And Bitcoin really solves that in the most fundamental ways. And it's not like it's just the other thing. It's just so profound about it. It's not like we're making some major self-sacrifice. It's like, oh, I'm going to pitch in a bunch of my money and pay these taxes to fund this thing I want to see, or I'm going to stop doing this thing that I love to do. I'm going to make this major sacrifice to help everybody. No, I'm going to serve my self-interest. I'm going to come up as hard as I can. And at the same time, my action in doing so is the best thing that I could do for everybody else.
Yeah, Bitcoin's like evolving. It's like evolving humanity. Like, if you go back into like the Roman times, like Romans figured out plumbing, right? And they figured out irrigation and how to run crops, and they had a really advanced civilization for back in the time. But then you go through a period of like the medieval times, right? And they didn't have plumbing.
Yeah.
It's like we had a point in civilization where humans were really evolving, right? And then the money got so corrupted. It literally sent us back into the Stone Ages, right? There's a period of time there. So it's like man stops evolving when money gets so corrupt.
Yeah.
You know, we're really limited in a sense. And then it's like, once you fix that money, you can see, like you said, just imagine when Bitcoin fixes this current world, and when all humans are kind of incentivized and aligned, where that's going to propel humanity as a whole.
And it's happening. It's happening in front of our eyes. I believe this is, some people may not agree with this, and there's a lot of Bitcoin maxis, you know, especially on Twitter, that like to kind of dissect statements like this. But I think we are in the midst of hyper Bitcoinization. Like, it's a gradually then suddenly. I think that it is happening. You know, come the end of the year with the accounting rules where Bitcoin will be, when corporations will be able to market, it'll be treated as fair accounting practices will be applied to it instead of indefinite intangible. Instead of treating it as an indefinite intangible, that incentivizes corporations to stack sats. The amount of money that's going to come in is just incredible. At the same time that other nation states are figuring this out, the hash rate is going through the roof. And I also believe, though, let's not forget that we are currently in a paradigm and a time with a political regime based upon a lot of people who are good at, and at the very least, we all know, willing to lie to you to serve their self-interest. And they're self-deluding also, I believe. I believe that they're telling themselves and talking amongst themselves about how they're lying to you in order to help you. So, and maybe you could say that there's an element of truth that I don't know. But I think that, you know, come the end of the year, maybe January next year, as corporations are trying to put this on their balance sheet, and like, dude, gosh, and I'll wrap this thought up, and then I want to share another very profound concept or idea. I think that's when Ethereum could get sued. Because it's clearly an unregistered security. And Gary G, he's talking about unregistered security. You think they're going to change securities laws? Or do you think they're going to attack Purse Boy and get rid of an absolutely irrelevant protocol that the marketplace technically has no use for, other than to speculate on other stupid protocols like yo-yo coins and land in the metaverse? Web3? What is Web3? It's not even a thing. It doesn't even exist, dude. Literally, we have the internet, and Bitcoin completed the internet. You can now move value through the internet. It's just an information network. Web3, that's ridiculous, dude. So anyways, I do think that what we'll have is at the end of the year, or, you know, midway through next year, is there will be things like, you know, the Ethereum network gets sued by the SEC because they have a foundation. It's a group of individuals. There is a head. You could chop the head off. It's done. You kill it. You can't kill Bitcoin, right? And so that would suppress the Bitcoin price. It would allow these wealthy elites to continue to develop a position. You know, there is this scarcity mindset that permeates our reality that I think is going to take hundreds of years, if not thousands of years, to go away. You could say that for hundreds of thousands of years, or at least for all of known history, we've been limited to the, I don't know, technological shortcomings of our reality. And we didn't have a metaphysical monetary instrument. We didn't have a way to trade fairly, you know? So, yeah, it's quite profound. And so I do think there's going to be some more FUD. I think it's going to be a little more ambiguous. It's not going to be super clear. But I think that they want you to have Bitcoin, even if they don't all know it yet. You know, another thing that's really profound, if my math is right, I think, you know, based upon 144 blocks a day, 3.125 block reward over the next 4 years, if it's that's 657,000 Bitcoin. 657,000 Bitcoin are going to get mined from the 19th, the 20th, in some parts of the world when the halving took place, till the next halving. And we got the 11 largest hedge funds in the States stacking sats on behalf of their clients. We have nation states putting it on the balance sheet as a treasury reserve asset. Jason Lowry, a military official, or I don't know, member of the armed forces or Space Force or whatever, wrote a very thought-provoking book, an amazing book, honestly, that was straight pulled off the shelves. He woke some people up in our government. You can't ban the Bitcoin. Look what China did. They banned themselves from it. I think that they wish they didn't do that. It hurt them economically. So the corporate accounting rules are changing. You know, I could speak a lot more to why that's so impactful. It doesn't matter. Just if you just, you know, basically corporations can now account for it in a fair way. It doesn't hurt their P&L. It doesn't hurt their valuations. If it trades up, they can mark it up. If it trades down, they have to mark it to whatever the price is. It goes back up, they can mark it up. The whole world, you could say, currently is going to be competing in the next 4 years over 657,000 coins. There are less people who hold coins that want to sell them than there are new people who want to buy them, or existing holders that want to buy more. And so how does Apple buy more Bitcoin? Because currently it has none. How does it get more Bitcoin than MicroStrategy has? MicroStrategy has 215, 210, 220, something. I think they're over 210. They have 1% of the supply. How does Apple get 210,000 Bitcoin if in the next 4 years, 657,000 are mined, and 11 funds in the States, Hong Kong's got funds, nation states are coming in, the whole world is coming for these coins. And so how does Apple catch up to MicroStrategy? I don't think they can. So, and it's not going to be by, dude, it's the central banks and the United States government. They're not going to ban the Bitcoin. Why? They can't do that. Because then you got this. Also, isn't there, like, this is why I haven't heard a lot of discussion about it, because I don't pay attention to it anymore, because I think it's a moot point. I think it's irrelevant. It doesn't even matter. You have the BRICS nations. Oh, and you got the gold bugs. Oh, they're gonna put us all on a gold standard, 50 grand an ounce.
Yeah.
I don't think that's ever gonna happen. That's
We
not
tried that.
likely.
It fucking
I
failed. It
understand
didn't work. No.
totally. Yeah, exactly. And so you can't attach the detached economy that we have, that detached based upon a technical limitation of a yellow shiny rock. You can't tether it back to that yellow shiny rock.
No.
I understand the thought process, and I'm sympathetic to the people who are still suffering from that cognitive bias.
Yeah.
However, that is an indicator, though, that there is divide in the marketplace on a macro level. There are other nations that are coming together, and they're saying essentially, hey, the United States has an unfair trade advantage over us, and we're tired of that. And how do we remove ourselves from that? How do we get out from underneath the thumb? Well, Bitcoin is the solution to that. And so if the United States attempts to confiscate the Bitcoin from its citizens or from these funds, or to ban it, then that means that these other nations have an enormous competitive advantage over us in the marketplace. And we are a net importer, by the way. Now we aren't a net exporter. We aren't, and I don't know, I'm not a macro economist, so forgive me if I say anything wrong, but I think the concepts from a much more macro perspective still apply. The world only needs us, economically speaking, because we're consuming their products.
Yep.
And if we're consuming their products, that helps them economically, sure, but we're printing money and then we're sending those monetary units over there. So part of really what we export our monetary technology in exchange for importing goods produced by the rest of the world. And progressively more and more services too, because service providers are moving overseas through the great digitization taking place in our civilization. If you have a digital based business, like let's go back to Jeff Booth says this, a calculator used to be a $2,000 device for you to do some complicated mathematical equations, and now it's free on your iPhone. Literally, the GDP increase from producing calculators is non-existent anymore. So digitization is allowing people to be hyper mobile and move their businesses, their cash flowing enterprises, their value and creating enterprises to whatever jurisdiction is going to treat them the best. And now you also can take your capital with you, and nobody could stop you. So the government isn't just going to be like, we're just going to come in and raid your homes and steal your Bitcoin. No, they're going to roll out the orange carpet. Oh, actually, you know what? We need you to spend more of that Bitcoin. We're going to reduce capital gains taxes. Could you please reduce some of that, or spend some of that Bitcoin? Florida is going to be like, actually, we won't even tax you if you sell the Bitcoin. The federal government does, but how about we don't? No capital gains taxes, or whatever. California is going to have to be like, look, we're losing all these people. Everyone's moving from California, and they sell their real estate. We can stop them from taking that, right? It's stuck to the ground here, right? Nobody's going to take their $100 million building from LA to Beijing. It's stuck. It's in LA. Oh, all this Bitcoin's leaving California. Hey, how about we won't tax you on it anymore? Breedlove says this. Bitcoin is going to make the governments beholden to the preferences of its citizens, because we actually have leverage. And it's not leverage in the form of some weapon per se. It's just we're powerful. We have self-sovereignty. We hold a monetary instrument that is powerful. It's thermodynamically sound. And I think that the governments are developing a position. I think people behind, dude, it's cerebral. It's like a psilocybin mushroom trip almost, like where you have these new thoughts where you're just like, oh my God, I cannot believe how profound this technological solution is to our reality. Important people who make policy and rule countries are having these same thoughts today. And it's this progressive thing. Oh, I can get rich. Oh, I can prevent them from stealing from me. Putin's thinking, some billionaire in Russia's like, oh, if I had a bunch of Bitcoin, the U.S. wouldn't have sanctioned all my treasuries. So it's like everything is good for Bitcoin, and all roads lead to Bitcoin. It's good for Bitcoin if they loan money into the market as debt against Bitcoin. It's good for the nation states if they do that and adopt it as a treasury reserve. Like even if the United States government attempted, let's say Elizabeth Warren and I don't know, Hunter Biden, or like the next it's president and vice president. You got Hunter Biden smoking crack, Elizabeth Warren just talking about how she's going to ban self-custody. There they are living in the White House. You know, and they're like, we're
Pocahontas.
just going to ban it all. There you go. Biden smokes a big crack fucking rip and signs a new confiscation order, 6103. Hunter Biden's crack-laden signatures right there on the document. It's good for Bitcoin, dude. It's like it literally is going to, the world's going to be like, hold on, this crackhead wants my Bitcoin so he can have a big crack party? It's a free crack giveaway, everybody. Dave Chappelle's in there dressed as Tyrone Bigham. He's like, free crack giveaway, everybody. Oh, I heard there's some free crack. And Hunter Biden's like, yeah, we're going to confiscate all the Bitcoin and we're going to subsidize the free crack giveaway. It's a giant party, dude. Even that crazy scenario is good for Bitcoin, dude. It's going to drive everybody into Bitcoin, and it's going to make the government realize that they ran into a wall of we don't give a fuck what you say. It's a giant, dude. Fuck, but dude, Trump's wall. I like the Bitcoin wall of I don't give a fuck of what you. 21 million, Honey Badger don't care. Okay. 21 million forever. It doesn't matter what you have to say. It's capital T truth. It's the ultimate form of law, superseding every other law to ever exist before it, checkmating plunder and fiscal irresponsibility, putting an end to all of the irrational, crazy looniness, clown world crap that we have in the world today. And so,
wow,
yeah, it's a big deal, dude.
That is a badass. That is a badass way to wrap this up. We've been going for 2 hours, man. What a great show. What a great conversation, man.
Yes, this has been fun, man.
I really hope you come back at least, once a month. I mean, I'd have you back once a week if you could make it, man. But I would love to continue these conversations, man. Anytime you're ready, brother. This is badass, man. Thanks for coming on, buddy. Uh-oh. We lost you, bro. What are the odds of that? We lost Eric right there at the end, man. Well, if you come back, if you guys get time, swing down below in the description. You're going to find links to Eric's Twitter account. Follow this man over here. Are you back, bro?
Yeah, I'm here. I got a little glitch in the Matrix, dude. Yeah. We dropped so much heat, the Matrix glitched for a second. It was like, oh, whoa, hold on. The simulation can't handle all this signal. Oh, man. Ones and zeros pouring down the screen. Had to kind of recalibrate there.
To reset the Matrix real quick. Brother, well, I appreciate you, man. I told everybody where they can follow you. Tell us a little bit about what you got going on right now, and then we'll wrap it up.
Yeah, so I'm just, I'm working on making more Bitcoin content. I film, little rants talking about the concepts that I've shared today, the long-term societal and philosophical implications of Bitcoin, how it's fixing our world, how adopting a Bitcoin standard, and I could even say how adopting Bitcoin as an ideology. It's just basically believing in math. It's believing in fairness. What I believe as a Bitcoiner is that we can trade fairly. I believe that there is an abundant world. There is so much abundance in our world today. It's so inspiring. The more and more I think about this, the more I've been liberated from like the nihilistic hopelessness that comes along with focusing on all the atrocities, which are real. They are real, and I don't want to downplay any of that. But the reality is that we have the solution. We have the most effective solution humanity has ever had to hedge ourselves against all of the plunder and to fix the broken technological conundrum that we had in our reality. And so, yeah, my life is just every day it's better and better and better. The more that I think about Bitcoin, the more that I align myself with other people working on this new monetary network, this protocol. I'm going to all of the big Bitcoin events. Connecting with more like-minded individuals. I have some long-term business plans as far as Bitcoin-only businesses. I've been producing cannabis for the last 15 years, and I'm pivoting my life away from cannabis production and contributing it to the Bitcoin revolution or transformation. I want to ride that wave. I don't think I'm gonna come in and provide some. I don't think Bitcoin needs anything from us other than for us to just serve our self-interests, and Bitcoin succeeds. But selfishly, I would like to participate in more of that because it's very inspiring. And yeah, it makes your life. I've said this before. It supercharges your life, man, and it is fixing our world. It is fixing everything in our world, and yeah, it's a big deal. Super inspiring. I'm super pumped. Super grateful about it.
Man, Eric, it's an honor to have you on the show again. Make sure you guys swing over there and follow Eric V Stacks over on X. He's one of my favorite accounts to follow. We appreciate you coming on the show, man. Thank you very much.
Yeah, thank you for having me. It's been fun.
God bless you, brother. Later.
Run.